I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome back to Equity Mates Investing, a podcast where we explore what's possible in the world of investing. My name is Bryce, and today we're looking at some of the highlights coming from reporting season. We're unpacking some of the big themes dominating the start of the year, and we have our very first community stock pitch for 2024, which we're super pumped about. To chat through it all, as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Good to be here.
Yes.
This is an exciting episode. We're getting back into the swing of the year.
Yeah.
A number of new things. As we spoke about last week, we're in a new studio setup.
Yes.
But before we get into the episode, we always need to start with our disclaimer. And speaking of new things, we're also trying stings this year.
This is not financial advice.
Yes. So a reminder that all information on this show is for entertainment and education purposes only. Any advice is general.
All right, Bryce. Well, as always, we like to start with news, what's going on in markets. And I think down here in Australia right now, we're in concert season.
Yes.
That's the big news at the moment. Taylor Swift, Blink-182, Pink.
Yes.
Yeah. Tough to visualize the amount of people that Taylor Swift has had at her concert.
Yeah.
So here's a good way to do it. The amount of people that have been to her Melbourne show could fill 3 MCGs.
Well, it did fill 3 MCGs.
That was the joke. didn't really. You know how like they're always.
Yeah.
Okay, all right.
Yeah.
That didn't really land. But look, it's not just concert season, because in financial markets, it's also earnings season or reporting season. We're getting a lot of results from companies both in Australia and around the world. So let's talk about that. Let's talk about what's happening in the news. And Bryce, as always, well, not as always, as per this episode, we've got a sting.
News and markets.
Love it. Right. Well, we are right in the middle of earnings season, Ren. And the news is this: the strength of both the Aussie earnings season and the US earnings season is somewhat surprising a number of analysts. Surprising markets, and we know what is happening in markets at the moment. They're responding well. What do I mean by this?
Yeah,
One third of the ASX 200 have reported at the time of recording. 47% of those have recorded above market expectations, while 34% have missed. And the story continues over in the States. Almost 70% of the S&P 500 have reported results. 81% of those have beaten market expectations. So overwhelmingly, we're seeing companies performing better than expected. And we know the result of that. Markets tend to jump a little when companies are beating expectation.
Yeah, and I think, the stock market isn't the economy, and the economy isn't the stock market. There are times when the stock market can do really well, but the economy and consumers can struggle. But I think it is a good sign, especially when, consumer-facing companies, retailers and banks are saying that they're doing better than expected. It's a sign that the economy is doing better than expected. And that might not gel with some people's experience at the moment, but on the nationwide or economy-wide level, it seems that things are holding up okay for the moment.
Yeah.
And that is a positive.
Well, you mentioned banks there. So let's go through some companies that have caught our eye. And one of the biggest companies in Australia is CBA. So talk us through the results there.
Yeah. So I think on that theme of the health of the economy and the health of the consumer, looking at these big banks, looking at CBA in this case, is a good, temperature check. And so we wanted to pull out their results. This is an indication of how strong CBA is. Their first half profit falls 8%, bad news, still raised the dividend more than 2%. So they've got cash in the bank.
Yeah.
But the profit fell 8%, which, not good. They said it was due to competitive pressures, and this is a bit of a theme. There's a lot of competition, especially in mortgages, and that's lowered their margins. Also, higher operating costs. The bank warned that they expect higher loan arrears this year. And so what that means is they expect people to fall behind on their mortgages or businesses to fall behind on their loans. So that's like a pretty clear watch out that things are going okay at the moment, but the banks are preparing for worse to come.
Yeah.
Yeah. Matt Common, the CEO, said, as cash rate increases have a lagged impact on households and business customers, we expect financial strain to continue in 2024 with an uptick in our arrears and impairments. So first big takeaway from earnings season is whilst companies seem to be surprising on the upside, they seem to be doing better than expected at the moment, the commentary that we're hearing suggests that there might be tougher times to come.
Yeah. And just to put into context, an 8% fall, they still cleared a $4 billion profit.
Yes, $4 billion
4.7.
for the six months, for the half year.
Yes.
So they're going okay.
They're going fine.
Yeah.
Moving on to another company that we've spoken about on the show a number of times for many years is A2 Milk.
Yeah, A2 Milk was a market darling, was the real central player in the, well, it was a real symbol of the China story.
Yes, yeah.
An Australian company selling into China and just absolutely grew. And then as that China channel dried up, A2's share price fell as well. And so we can look at A2 as a sort of sense check on the China trade story, the health of the Chinese consumer, and just what's going on with how Australian products are being, or New Zealand products, we should say, are being received over there. A2 Milk blew the lights out. They reported revenue up 4%, EBITDA up 5%, their margin was up, net profit was up 16%. But here's the interesting thing. Here's why we wanted to pull it out. Their Australian-New Zealand segment struggled. Revenue was actually down, as was EBITDA or profit. So it was actually strong growth in China and okay growth in the US that drove this result. Revenue from China was up 17%. EBITDA from China was up 22%. And A2 Milk was once again a top 5 infant formula brand in China. So that isn't to say that...
Has it ever not been?
I think it was when things got pretty bad, the Daigou channel dried up.
That was huge. I
Massive.
forgot about that.
Yeah. You couldn't keep it on the
Far
shelves.
out. You couldn't keep it. Yeah.
I owned A2 Milk when I was working at Coles, and I would always say my sell signal would be when there was A2 infant formula on the shelves.
Yeah. Wow.
Yeah, you had to keep it behind the counter of the service desk because it would just get cleared out. Yeah.
Far out.
Yeah. So that's an interesting one. Obviously not close to its all-time highs, but turnaround. Well, riding the ship.
Yeah,
good to say.
yeah. And finally, Ren Cochlear has had a massive first half as well.
Yeah, now I wanted to include Cochlear because there are 3 big healthcare stocks in Australia, like bigger than all the rest. CSL, ResMed and Cochlear. Great stories of Australian healthcare taking on the world and doing really well.
Yes.
But it feels like Cochlear doesn't get as much love as the other 2. And so this feels, it deserves some love. We're going to give it some love. And it feels like it might be rounding into getting a lot more love from a lot more people. How's this for a set of results? First half sales revenue up 25% to 1.1 billion.
Yeah.
Underlying net profit up 35% to just shy of 200 million. And the company will pay a record dividend of $2 a share, up 29%.
Love that.
So
Fully franked?
70% franked.
Okay.
So some big growth numbers from Cochlear, and their commentary suggested there was more growth ahead. You would be surprised if a company said there wasn't more growth ahead. But really good result from a really good Aussie company taking on the world.
Are you taking the 7% fall in CSL as an opportunity to get in?
I own CSL. I'm not sure I'm going to add more to it. Are you?
No.
Okay.
Yeah. They do say whenever it's under 300, buy it. I think it's at 280.
Yeah.
The context here is that they were in stage 3 trial for I can't remember what drug it was.
Heart drug?
Yeah. Heart drug that didn't go according to plan, and they've been sold off a bit. So a company that continues to perform. Yeah.
Now, Bryce, as we round out our discussion of the news, there was a question from our Facebook discussion group. And if people want to come and join the conversation, the Facebook discussion group is a great place to do it.
Yeah.
Ash from the discussion group wanted your take on the Brad Banducci. Now, the almost walkout. For people who aren't familiar, Brad Banducci, the Woolworths CEO, was interviewed on Four Corners, and a clip has been circulating social media of him getting asked a hard question, stumbling over that question, and then asking if the ABC can cut it, the ABC saying no, and then him walking out and then being convinced to return by his PR team. Now, Ash noted that you have always been a big fan of Brad Banducci
I have been, yeah.
and wanted your take on it all.
So I haven't seen the full Four Corners. I think it was out last night at time of recording, so I will watch that. To be honest, I was very surprised at how he reacted to that. He's usually a very cool, calm and collected, strategic, not salesman, but knows how to pitch himself and present. And I was very surprised at that reaction. I'm not going to slag him off or anything because I'd still love to have him on the show, but not a good look. And I think, look, it was obviously probably clipped up and taken a little out of context.
Get out of here.
Give him the benefit of the doubt.
Let's put it this way. He will not be doing more media than he needs to in the immediate future.
Well, let me put it this way. I also saw a clip of the Coles CEO who did a Tony Abbott last night on
Leah.
Four Corners, just didn't respond. The journo said to her, it was something along the lines of, this is what we classify as price gouging. What do you have to say? And she just sat there.
No way.
And for about 10 seconds, and he's like, are you going to respond to that? And she said, we don't engage in practices like that. But it was a long, 10 seconds of awkward Tony Abbott style. Yeah.
All right. Well, neither of us have watched the Four Corners doco, but I think we should. But let's leave it there for this week. And just a quick reminder as we move on to the next segment, the Equity Mates community survey is still open. It's your chance to help us shape the future of Equity Mates, both the podcasts and beyond. And as a thank you for filling out the survey, we are giving one Equity Mate $500, hopefully to put towards your investing. Not compulsory though. So please do fill it out. The link is in the show notes.
It shouldn't take more than 5 or 10 minutes and it makes a lot of value. So, Ren, at the top, I said there have been some huge themes kicking off this year and absolutely dominating markets. So let's get stuck in. We're back for the first week, but boy, oh boy, there's been a lot that has happened while we've been on holidays.
Yeah, there have. So we wanted to just cover it off. Some of this is...
it's not new news.
No, but our takes are going to be fresh.
We should acknowledge it.
So I think, if we were to say when we signed off at the end of last year, sort of mid-December to now, for me, there's been one theme that's dominated all others. AI.
Yeah. Absolutely.
Yeah.
Yeah.
And I think NVIDIA is up 50% year to date. That's just a continuation.
It's unbelievable. I was thinking about this the other night. It's just one of those, I look back at this time last year when it started to really, really rip. 2023 up over 250%, and now it's another 50%.
Yeah.
And throughout all of last year, people kept saying, have we missed the boat? Have we missed the boat? Have we missed the boat? If you just got in at the start of this year, you're up 50%. It's unbelievable.
Yeah.
Just goes to show how trying to pick the moment in these things is just the wrong way to go about it.
Yeah. I also think there's trends in investing last longer than we think they will.
Yeah.
And so oftentimes when people feel like they've missed the boat, the trend has a lot further to run.
Yeah.
Now, the second question is, how far will it fall when the hype comes out of the market? Because the hype will come out of the market at some point. And we're probably above that point.
Well, I read an article in the paper in the AFR that they could be on track to be the first tech company ever to double their revenue for 3 years in a row. So they've done it the past 2, but to do it again this year would be an unbelievable feat.
Yeah.
And the market's not pricing that in just yet, but they're pricing serious revenue growth. And we know what happens if they don't hit that expectation.
Yeah.
Their PE at the moment is just ridiculous.
Yeah, but I mean, if you're doubling your revenue every year, you'll grow into it. So I think that's the headline. OpenAI's new text to video was pretty mind-blowing. I plan to make a reel and put that up on our Instagram. So if people want to see it in practice, they can head to our Instagram. But yeah, I think first theme is AI keeps ripping.
AI and then all of the, I guess, subcomponents around it, like ARM has had an incredible start to the year. The semiconductor producer, I think, up almost 90% year to date, which is just shooting the lights out.
Yeah.
So Plenty of opportunities still in the market. Ran the next one that was big news while we were on holidays was Apple's Vision Pro headset.
Yeah, what are your thoughts?
I love it. I'm really excited about this.
You love it, having never tried it.
Having never tried it, but I've seen many YouTube not tutorials, but explanations of it and demonstrations. You sort of see how Apple talk about it for the next sort of 5 years. You know, you just trust that Apple, they just create unbelievable product. And I think that what we're seeing now, V1, what it could be in the next 10 years is super exciting for me. Yeah.
I tend to agree, but, you know, like I could take the other side of that argument. Like they have had product flops.
Yeah, of course. Yeah. Oh, not many, but
yeah.
Apple TV, yeah. But I think
further back, like the Lisa and like, you know.
True.
I think, so I think if we look at the market, first of all, Apple was up 5% for the year in sort of mid to late January. It's now down 2% for the year. So I think there was maybe mixed reactions from investors and the market generally. Apple's obviously such a big company that any new product launch probably isn't going to be the most important piece of
definitely not.
information. This has more to do with sales in China and, you know, overall iPhone sales and, you know, services revenue growth and stuff like that. But I think we can say that the market is not overly enthused. Speaking of not overly enthused, did you watch Mark Zuckerberg's video?
Oh my God, I did. Yeah, it was so wussy. I found it like
Hey, he'll fight you. He's big into his UFC now.
I just found it I thought it was pretty pathetic, to be honest.
It is a strange phenomenon. Like you don't see rival companies giving reviews of like their rivals' products very often.
To give context here, Mark Zuckerberg sat down and did a direct piece-to-camera review of Apple's Vision Pros and essentially just said all the reasons why I can't even remember the name of it.
Meta Quest.
His Quest 3 headset shits all over Vision Pro.
Yeah.
But it was just weird, I felt.
Yeah.
It's like, what's the point in this? Let it do it. Let it do it speaking for itself.
Yeah.
Let it speak for itself.
Yeah. So I read Stratechery by Ben Thompson, good technology blog. He had some thoughts on the Vision Pro and we included it in our Equity Mates email a couple of weeks ago. If you did miss it, I'll include the link to it in the show notes so you can read it. But he had this view that the Vision Pro should be thought of like the iPod, in that Apple has taken a very specific use case. So with the iPod, it was audio. And he has this view that Apple have made a number of trade-offs in the design of the Vision Pro to make it just a really good entertainment product. Like they've optimized it for watching TV essentially, and they've made a lot of trade-offs to make it less good as a work and productivity tool. Okay. But his view is that in the same way that the iPod changed the game for audio, and then it was just 5 years later the iPhone gets
launchpad for the iPhone.
Then the iPod is
done.
It's
obsolete.
Obsolete. Perfect word. Yeah. He kind of thinks that they're doing the same thing here. They're like trying to make a beachhead with this new form of technology with entertainment, and then over time it will become, I guess, obsolete or superseded by a more holistic product. And so he like steps through why he thinks that with the trade-offs they've made and like what that could mean. So a really interesting article and I guess a bit of a different take to a lot of the it's good or it's bad takes that you sort of see. So
it's progress.
Yeah, it's a step forward. It's the start of a step forward. And, you know, Ben makes a point that since the iPhone, none of Apple's new product launches have been new computing platforms in, you know, CarPlay, Apple TV, Watch, AirPods. They're all just sort of like accessories and devices and stuff like that. But this is their first new compute platform since the iPhone. And so you got to think of it differently. So anyway, really interesting. Give it a read in the show notes. But Bryce, as we close out the what have we missed, I just had a quick look at the ASX.
Yep.
Top performers year to date, worst performers year to date, over $1 billion in value.
Yep.
Two worst performers, Lionstown down 39%. You spoke about lithium and how much it's fallen in our last episode.
Gina will be hurting.
Yes, but also like she'll be all right.
Yeah.
And also Domino's Pizza's down 33% year to date. So
I would say the amount of Domino's pizzas at our house is up 33% this year.
Really?
Yeah, Ham's been hitting it hard.
Okay. Well, Ham copping a drive-by. But interestingly, the best performer on the ASX valued above $1 billion. No points for guessing because I'm sure you can read it in our doc. But Cettire up 56% year to date.
And so for those tuning in for the first time, Cettire is an online retailer for high-end luxury goods, something
fashion.
like that,
Yeah.
fashion. We actually spoke about it on Ausbiz. It was pitched as a stock of the year or a Watchlist Wednesday like 2 or 3 years ago.
So I remember I bought it after
So did I,
hearing about it in 2021 from Michael Frazis.
Yes.
I reckon I lost about 80%
Me
on
too.
that stock and then I sold it. It was in the $4 range and it fell down to like 40 cents.
Yeah.
So it reached a high in November 2021, then it fell more than 90%. And then it's 10 bagged up from there. It's now 13% above where it was in November 2021.
This is just one of those don't sell
Or
situations.
buy the dip. Like
it came out that
it's fallen 90% and then 10 bagged in less than 2 years.
Yeah. It came out that there's all this weird stuff going on with the CEO though, I recall.
Well, they've
But
obviously resolved it. Yeah.
I'm not going to say anything more than that because I don't know any more than that. But fascinating.
Anyway, one to
Kept
watch.
my eye off. Took my eye off it.
Yeah.
10 bagged. Anyway. Well, we've missed plenty throughout our summer break, so come and join us in the Equity Mates Facebook group to continue the discussion on some of the big themes that are playing out this year. We're going to take a very quick break and we'll be right back with our first stock pitch from a community member for 2024. Welcome back to Equity Mates Investing. I'm really excited for this segment, Ren. We have our first community stock pitch for 2024.
Yeah, and we do have a sting for it as well.
Yay.
So
Equity Mates. Stock pitch. Step up to the mound. Steer right.
Nice. All right. So we have our first community member coming in to give us a stock pitch. His name is James.
So James, tell us about the company.
So the company I was going to pitch is Synlait Milk, or SML on the NZX and the SM1 on the ASX. And the company I've been particularly familiar with for some time because I'm in the capital project sector of the dairy industry. And over the past decade, during this time, Synlait's invested significant amounts into building more assets in its manufacturing sector. To capitalise on growth opportunities being attributed to being an exclusive manufacturer for A2 Milk.
Ah, right. Well, that's good. We were just talking about A2 Milk earlier in the show. So James, before we go too deep on this, for everyone listening, can you just give us a high level on what Synlait Milk do? That's Synlait.
So at a high level, Synlait operates in 3 different sectors. They operate in the advanced nutrition, which is your infant, pediatric and adult formulations. Food service, which is a new market they're entering into, which is products that are used by things like restaurants. And one of the things that they're producing at the moment is UHT cream. And consumer foods. And most of the consumer foods are produced by Dairyworks, which are butter and cheese products. And Synlait's recently made the decision to divest from Dairyworks.
Nice. We love a New Zealand dairy player. Like A2 Milk is the obvious one. Fonterra is obviously massive. So it seems like they're doing something right over there. So you mentioned that they're manufacturing for A2 Milk. Is that the only big known brand that they're manufacturing for, or would there be other brands that we're familiar with?
So they have a few global customers, namely Nestle and Domino, which are the 2 largest by market capitalisation. And in 2020, they announced a new multinational company, but the name of which hasn't been publicly disclosed yet.
Oh, wow.
And so when you emailed us about this stock, you had a few sort of points around the thesis, and we should make it clear that this is not a buy, hold or sell recommendation. We're just encouraging the Equity Mates community to come and, discuss some ideas that are interesting them. So what are some of the key pillars that make up your thesis about Synlait Milk?
So the main things around the thesis are the asset quality that Synlait has, how new their assets are and how much more life they have. And they also have access to the Chinese market through SAMR regulatory licenses for the Chinese label A2 Milk formula namely. But at the moment, A2 Milk and Synlait are going through disputes around the exclusivity agreements they have. And additional to that, Synlait's market cap is heavily suppressed, so it's currently around 153 million, and its total equity value is around 790 million. So it seems like it's poised for a good position for potentially an acquisition from either A2 Milk or Bright Dairy. Complete speculation. A2 Milk having 20% ownership of the business, and Bright Dairy having 40% ownership.
And for people who aren't familiar with Bright Dairy, I'm having a look at them. They're a big Chinese multinational food and beverage company. So I guess they're a key part of the business having access to Chinese markets. So one thing that, if people are Googling at home or having a look, the share price has been whacked down almost 80% in the last year. So what's caused the market to fall out of love with it, and what do you think's going to change?
So they've had several downgrades with reduced sales, revenue and earnings forecasts. They've gone through the process of restructuring to try to reduce operational costs, but the market is still broadly quite nervous, and there is uncertainty on the future profitability of the system, of the business. And they've recently gone for a process of renegotiating their banking finances to give it enough working capital and credit facilities. The amount they've renegotiated is 480 million for 1 to 2 years, and the repayment of at least 130 million of this needs to be done in March this year. So that's the reasoning for divesting from Dairyworks. But there's been no update to the market on the sale. So it's entering quite a critical time at the moment.
Sounds like we could be on the brink of a bit of a turnaround story here. So, James, we do want to say a massive thank you for being the first Equity Mates community member to pitch a stock for 2024. So that one was Synlait Milk. The ticker is SM1. It's listed on the ASX, market cap of about 154 million New Zealand dollars, currently trading at 66 cents. As we said, it's not a buy, hold or sell, but we do just love hearing what companies are interesting our community members. And we did talk about the turnaround story that A2 Milk is going through at the moment. So it's a nice way to close out this episode. So, James, thank you so much. We really appreciate it. And we'll put this one on our watch list to see if it can turn things around in 2024.
Okay. All right, guys.
All right, well, that brings us to the end of this episode. A massive thanks to James for coming on and sharing a stock. A lot going on in markets. Earnings season continues. We'll be back in your ears on Monday to keep unpacking it all. Until then, have a good weekend.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.